Good afternoon. First, to Qualivita for inviting someone who's not in the food sector to come and speak, and also a warm thank you to my fellow bank for allowing the podium to be taken over by another bank for a few minutes. What I'd like to do this afternoon in just a few minutes is to draw some parallels between the sector that I come from, the finance sector, and the sector that I probably wish I actually worked in many days, the food sector. And really just to spark a bit of thinking and to put the concept of geographical indications into maybe a slightly different context for you than you may have thought about them before. So I'll just cover off a few quick thoughts on how these two sectors have grown globally over the past few decades, and then try to draw a couple of comparisons between them on some different topics. One related to how they think about the concept of sustainable production. Secondly, how they deal with the topic of externalities, particularly negative externalities. If I have time, I'll touch quickly on the concept of resiliency or stability, and then just finish with a quick closing thought. So in terms of the growth of these two sectors, I mean, certainly in the sector where I come from, the finance sector, there has been a trend over the past 2 or 3 decades in terms of increase in internationalization and growth of global banks. Probably started in the 1980s with the Japanese banks. Then after the formation of the euro, the European banks started to become quite large. And then in the past decade, there's been an increasing focus of activity in the United States, and that obviously in part led into the financial crisis. A priori, this is not bad. I mean, having large institutions certainly brings some efficiencies with it. But what it does require is that regulation certainly keep up with how these institutions grow and how the sector develops. In the food sector, I would posit there's been a similar sort of increase in scale and concentration across the value chain, be it in some of the inputs, seeds and chemicals, be it in processing, distribution, retailing. Again, large firms developing in the country where I currently work, Switzerland. You have the Nestle's, the Syngentas. In the country where I come from, the United States, you have the McDonald's, you have the Cargills and other large firms that operate quite globally. Not necessarily bad, but obviously as these production chains and distribution chains become quite long, certainly if there is a problem somewhere in the chain, those effects can spread quite quickly, and those impacts ultimately are felt quite locally. Whether it's something like avian flu, the BSE scares, the E. coli scares, one sees that at the end of the day, effects and impacts really have to be dealt with on a local level. So this requires some thinking about how to balance out the global and the local. So in terms of a few kind of analogies, and again, these won't be perfect. Obviously, the finance sector is a service sector. It's based on information. It's highly mobile. The food sector, agricultural sector, it's primary sector. It's very place-based. It's very tangible. So they're completely different sectors at their essence. But I think they do have some parallels in terms of some of the challenges they're facing. And what I'd like to do is spark a bit of thinking about the different regulatory tools they're using to try and address these. So the first concept I wanted to think about was the concept of sustainable production. And here I'll try and draw an analogy between capital in the finance sector and soil in the food and agriculture sector. So certainly for a bank, capital is how it finances its own activities. Capital provides the base from which loans occur, from which other financial activities occur. And certainly we saw in the crisis that banks were undercapitalized. They had too little capital, not high enough quality capital for the kinds of risks they were ultimately running. So what the regulators are doing in response is to fundamentally revise how capital is conceived of, how it's calculated, and ultimately requiring the banks to hold more capital and higher quality capital, with the hope that in the next crisis they will have enough equity of their own to be able to absorb some of the losses without having to require some of these supports that happened in the last crisis. In the food sector, I would say that soil might be a comparable concept. I mean, certainly soil provides the ultimate base from which the productive activity occurs and from which agricultural products are produced. And obviously there are growing concerns about soil degradation in the ongoing ability to have enough high-quality soil regenerated that can continue to produce food at a level sufficient to feed growing populations, particularly populations with changing dietary habits. There are certainly tools and concepts, regulatory concepts in a way that are developing to try and encourage more sustainable practices that ultimately lead to more productive soil on a sustainable basis. One can look at things like bio and organic production processes, no-till agriculture processes, integrated pest management, other sort of standards that really are trying to encourage a production process that ultimately will ensure that there is an ongoing base from which to continue agricultural activity. What I think is interesting here when it comes to geographical indications is how geographical indications have grown up in a certain place and have been produced over long periods of time. So in some sense, I would posit that geographical indications almost have embedded within them this concept of sustainable production, continuing to ensure that they're not extracting more resources from the local land, the local productive base, soil, than actually can allow for sustainable production in the future. Obviously, there are other concepts in play, and certainly where I come from in the United States, there's probably been more of a stress on the organic production method. But I think over time, people might come to look at geographical indications as almost embedding this concept of sustainable production and start to think about using them more as a means to codify and embody a set of production practices that really can help ensure continued sustainable production of certain agricultural products. Next topic I wanted to touch on just quickly is this concept of externalities, particularly when it comes to negative externalities, and how when things go unpriced, they can certainly lead to the misallocation of certain resources, which obviously can have negative effects over time. In the finance sector, I would propose that one of the causes of the crisis was basically a mispricing of liquidity. Funding was ultimately too cheap, so people made lots of speculative investments because they were able to access capital and access funding at a very cheap price. And they had not factored in the possibilities for extreme events, for financial crises. This obviously led to a misallocation of investment. And as there was a loss of confidence during the crisis, this led to a further constricting of economic activity and basically started to starve the real economy of liquidity and of funding. And we've seen the effects of that during the financial crisis that occurred, and concerns today about what may happen in the EU going forward. The regulators have responded by basically trying to develop a whole new set of regulations around liquidity. These are regulations that hadn't even existed before at a global level. So there's been a lot of work and thinking that the financial sector has gone through in terms of how to set up appropriate liquidity regulations to hopefully try and prevent this from happening again. In the food sector, I think that, again, parallel is not exact, but one can think about all the externalities that are currently being unpriced within particularly the agro-industrial production model, be it environmental degradation, be it stress on water, stress on land, or be it the competition that's going on now in terms of land use, be it for food or for fuel. It's a matter of thinking about how to regulate the sector, how to develop sort of incentive mechanisms that, if things are appropriately priced, will lead to an appropriate set of trade-offs within the sector that ultimately will hopefully prevent recurring crises. Again, I would propose that there's something interesting going on with the geographical indication concept, and that these are products that have been very localized in their production for decades, centuries, sometimes potentially even millennia. And so clearly they found some natural balance there between not extracting too much resource, thinking for the long term, ensuring sustainable practices are in place. And so I think geographical indications as a tool can be quite a useful mechanism to, in a sense, reorient the overall production process and reorient people's thinking about what is value. I'll just touch very quickly on the concept of stability of resiliency in an effort to save some time, as well as to encourage you to read the new Qualivita issue. I'll just fly over this quite quickly. But the concept here, I mean, certainly in the financial sector, we saw firms that were too highly leveraged, and that was part of why they were ultimately unstable. And so they suffered small losses on their assets, really, but because they were so highly leveraged, that basically tipped them over the edge and took them into insolvency. In the food system, I would, again, propose that we have a highly leveraged food system already. Although we talk about 1 billion people being malnourished, the reality is there are enough calories produced globally to feed current populations and even growing populations. Unfortunately, it's often the wrong food in the wrong place at the wrong price. as well as there being a very large degree of waste throughout the system. And so in some sense, it becomes a question of where is it most efficient to try and change the system? Where is your most appropriate leverage point? Is it to try and continue to expand production, as a lot of white papers and studies and international proposals keep making, or is it about trying to make sure we actually produce the right food in the right places for local populations, that we don't waste as much food globally? Again, I think geographical indications provide quite an interesting message, or quite an interesting story here, in terms of their ability to focus on connecting local traditions, local cultures, local dietary habits with a specific product. And their ability to continue to be produced over and over shows in some sense that they haven't been over-leveraged to a point where they ultimately become unsustainable. So what I'd like to do is just finish with a quick concluding thought. I'm not sure this will be visible to everyone, but there's a quote there from Keynes about the balance between the global and the local, and which parts of an economy might be best thought of as being international or global in nature, and which ones should be more local. And I won't actually make a comment about what he says regarding the finance sector in that regard. But what I think we are going through is now a period of rebalancing, a period where we're really trying to, we've had several decades of globalization and increasing internationalization. Certainly that's brought great benefits. Certainly there have been scale efficiencies that have generated in certainly a lot of development throughout the world. But clearly it has come at a cost, and we've seen those costs, and we're still experiencing those costs. And so I think we're entering into is a period of rebalancing between trying to find the right balance between the international, the global, and the local, and the national, and trying to make sure there are mechanisms and regulations available that really allow societies and countries and local groups to express their own value preferences. And this is where I think geographical indications really come to the forefront. Because in some sense, they're expressing a whole different concept of value, more qualitative concepts of value that relate to traditions, that relate to quality, that relate to culture. And what I think will hopefully develop over time is that we will start to absorb some of these more qualitative concepts of value into our overall broader economic system, and start to find a new balance between the global and the local as we proceed over time. And so that's why I think geographical indications really provide kind of a touchstone or a guiding star in terms of not only the development of the agricultural sector, but even more broadly across the economy. So I really applaud the work that's being done by groups like Qualivita, as well as Origin, that are really trying to help promote the concept and explain it better to people. And I especially applaud all of the producers and consortiums and associations who every single day are focused on producing quality products over and over for not only their local populations, but at times for other groups more broadly as they export some of these products. So I hope that's provided a few bit of food for thought, and I'm certainly happy to take any questions later on during the breaks or tomorrow. Thank you very much.